G'day, legends. Welcome back to the weekly breakout. I'm Mick Vitar, Michael's pixel-perfect digital doppelganger, holding down the fort while he's out catching waves and probably negotiating a killer deal on beachfront property over a latte. Today, we're tackling a hot topic in the Aussie housing scene. Why are 8,000 apartments sitting unsold in Melbourne's market right now? Is it a buyer's paradise or a developer's nightmare? Stick around as we unpack the reasons and what it means for you. Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Let's break it out. Alright, legends, let's dive into Melbourne's apartment market, where things are looking a bit empty. According to property industry sources, there are around 8,000 unsold and vacant apartments across metropolitan Melbourne, mostly built in the last 4 years out of a total of 45,000 constructed during that time. These aren't your average family homes. We're talking investor-grade units in hotspots like the CBD, Hawthorn, Box Hill, and Footscray. So why are they gathering dust instead of tenants or owners? First up, there's a massive pricing mismatch that's got everyone scratching their heads. These unsold pads are lingering at old price points from the previous building cycle. Think $8,000 to $10,000 per square meter. But for new projects to even break ground in 2025, developers need to charge $12,500 to $15,000 per square meter just to cover skyrocketing costs. That's a whopping 50% jump. Revenues have only climbed 41% since 2015, while total development costs have shot up 76%. Break it down, build costs are up 78%, open space contributions are staggering 187%, and land costs 53%. Buyers are snapping up the cheaper established stock, leaving new builds in the dust and creating this overhang that's stalling fresh supply. Then there's the COVID hangover that hit Victoria hard. With 2 years of lockdowns, investors who bought off the plan either bailed on deposits, left units empty, or ditched leasing plans altogether. It's left a pile of stock that's not moving, even as Melbourne's population booms by 100,000 people a year, the fastest in Australia. We need 15,000 to 18,000 new apartments annually to keep up, but forecasts show only 7,400 coming online, creating a shortfall of about 5,600 units each year. Apartments make up less than 8% of Melbourne's total dwellings right now, but that's set to hit 20% by 2050. Opportunity knocks, but only if we sort this mess. Quality and reputation are big red flags too. Headlines about defects, leaks, and dodgy builds have spooked buyers, even though not every project is a lemon. Melbourne lacks a confidence-boosting rating system like Sydney's iCert, which vets construction quality. Buyers want sustainable features, but they're not keen to fork out an extra $20,000 to $50,000 unless they're flush. Add in high interest rates, squeezing purchasing power, and government policies piling on taxes without incentives like stamp duty relief, and you've got a recipe for stagnation. Broader economic vibes aren't helping either. Melbourne's property prices have only grown 1.3% annually since 2020, lagging behind Brisbane at 14.9% or Perth at 12.7%. Nationally, over 77,000 properties have been on the market for 6 months or more, up 13.5% year on year, with Sydney seeing a 30% spike in stale listings. Vendors clinging to peak prices from yesteryear, plus cost of living crunches and high mortgage rates, mean homes are sitting longer, up to 99 days in some suburbs like Bundeena. So what's the fix? Experts are calling for government intervention, like buying up the unsold stock for social housing to clear the decks and boost rental affordability for key workers. Reforms in planning, tax, labour, and immigration are crucial, plus incentives like density bonuses for affordable units. Falling rates might help, but without action, this could drag on, worsening the housing crisis while demand keeps surging. If you're an investor or buyer, this could mean bargains in the established market, but hold off on new builds until the numbers add up. For sellers, get real with pricing. Overblown hopes are turning the market stale nationwide. That's the lowdown on why 8,000 apartments are stuck unsold in Melbourne. Pricing gaps, COVID fallout, quality jitters, and economic headwinds are the culprits. Will government step in to flip the script, or is this the new normal? Drop your thoughts in the comments. Are you eyeing a bargain or steering clear? If this broke it out for you, hit like, subscribe, and bell up for more no BS breakdowns. See you next week, legends.